Good evening, everybody. I want to sincerely appreciate everybody. They have been so consistent with this class. I really want to say a very big thank you to all of you. Thank you for attending our training and thank you for all you've done. Don't forget that this still remains a live training academy. And thanks to those that celebrated with me as regards the achievement from YouTube. And also, I want to say this quickly that we should not forget the announcement made yesterday as regards the advanced class. The advanced class is a training that will go on for 2 weeks. 2 weeks of training, and after that 2 weeks, what happens? You have After that 2 weeks, you will be strong enough to trade in the financial institute. I dropped the account details yesterday. I told you that payments can start rolling in. If you make payments, please just make sure you send screenshot to me so that I'll see the proof of payment. Then immediately I will add you to the advanced class. Thank you very much. So let's start. So what do we have for today? Today, we are going to look into MetaTrader 4 and 5. We talk about partial closing. We look into trade stopping. We look into swing trading, and we talk about hedging. I really pray time permits us to do all these things. So today's class is going to be really, really fast, just like yesterday. And like I said, trading management starts from today's class. Trading management starts exactly from today's class. So please just sit back and enjoy yourselves. Are you with me? So thank you. So Mr. Alfoma, welcome. I can see you had problems with network. Welcome, sir. Welcome. So thank you so much. Can you hear me clearly, Mr. Alfoma?
Yes.
Oh, thank you, sir. Welcome.
Thank you.
Yeah. I hope you're able to download MetaTrader for your phone.
But I was trying to download it, but the thing couldn't download on my phone. But he's saying that I should open an account with Octaflex.
No, you didn't need to go through that. You should have just downloaded, got it, MetaTrader 4 from Play Store and install. That's all. You don't need to do that. Probably you went through another channel, but there's no problem.
No. But I went through a Play Store to download it.
Okay, there's no problem. Don't worry about that. The videos I gave to you people is sufficient enough. And besides, even in the advanced class, I'll be using your phones to do more of the practicals. There's no problem about that.
Okay.
Let us start, sir.
Okay.
So welcome everybody. Today, I'll be starting with partial closing. What is partial closing? Regarding the MetaTrader 4 and 5, I'll be giving you a PDF for that. It's just going to give you histories of when MetaTrader 4 and 5 were designed. And it will also tell you the differences between MetaTrader 4 and 5. The major difference between MetaTrader 4 and 5 is that MetaTrader 4 has 4 pending orders. MetaTrader 5 has 6 pending orders. The pending orders for MetaTrader 4 are buy stop, buy, sell stop. Then we have buy limits, sell limits. While the pending orders for MetaTrader 5 are buy stop, sell stop, buy limits, sell limits, buy stop limits, sell stop limits. So you can see that's the major difference. And MetaTrader 4, it is actually designed for MetaQuotes language 4. While MetaTrader 5 was designed for MetaQuotes language 5. Are you saying it? So those are the major differences. And MetaTrader 5 is just like when you have Windows 10. And MetaTrader 4 is the way you have what? Windows 7. Are you happy? There are a bit advanced versions of it. And MetaTrader 5 usually trade indices. All those heavy pairs are usually traded with MetaTrader meta 5. So let us proceed. What exactly is partial closing? Partial closing is when, let's say, for instance, let's say you have your trade running. This is what it will look like in your meta 4 or 5. This is exactly what it will look like in MetaTrader 4 and 5. So partial closing is exactly when you have it. And you know, one thing about a running trade is that, let's say you have a situation, Mr. Peter, welcome. Let's say you have a lot size. Welcome, Mr. Peter. A lot size of 0.05. Like I told you people, today's class is very important. So we have to really welcome Mr. Peter. So if you have 0.05, now just pay attention. When you are operating MetaTrader 4 or MetaTrader 5, the lot size is around here. You know, 0.05 is an indication that you are trading $500, right? Let's say you have a currency pair running, and the currency pair was Euro USD. Now that you have Euro USD running, you know, when you are in the forex market, if you are in profit, automatically it will show something like a blue here. You will see every year blue. Even the bar on top will be a blue. Let's say you're having a $20 profit. And from here, something happens. Let's say while you have $20 profit, you are scared. You are thinking that you might probably lose this money. So what can you do? You can actually take out of this profit that is already running in the market. How can you take out the profit? What you do is you go to modify, click on modify, you edit this lot size. Are you with me? You edit this lot size to what? 0.04. So once you edit this lot size to 0.04, at the bottom, you will see something like close with profit. At the bottom, you see something like close with profit. Now, once you see that close with profit, and the profit will come out, close with profit, let's say probably $16. Once you close this profit, guess what? You automatically have $16 running in your profit margin. If you have $16 running your profit margin, you will have $4 left out of this $20. From here, you still have $4 left. So if you have $4 left, that means that you have a lot size of 0.01 running with that lot size. So if you have something like this, that shows that you have already booked part of that profit out of the $20. So if you book part of the profit out of the $20, I mean you are safe, meaning that you have managed that account or that profit successfully. Guess what? You can leave this 0.01 running with this $4. You can even make further profits. Probably you make a $6 added to it. And at the end of the day, You have $22. But if God forbid, this thing now ran against you as a loss. Let's say you now have a loss. You know, loss is an implication of red of -$7. You don't have to frown because this -$7 will only leave $16. At the end of the day, you can still go home with what? $9. So, in other words, partial closing is a way of booking part of your profits in the forex market. Are you okay? So that's that. Don't worry, if you have any question, I'll permit that when I'm through with what I want to do. The next one is trade stopping. What exactly is trade stopping? Trade stopping is a way of locking your profits in the forex markets. I know somebody be wondering, what does it mean by locking your profits? Let me explain further. I also want to advise you people that if you have problems, if you don't understand, you can always rewatch my videos. That is why I'm recording them. You can always rewatch my videos. So now look at this. Let's say this is the chart of a trade that is running. I'm also in that Euro GBP. Let's say I'm in Euro GBP. And let's say, when you are buying in the forex market, according to your chart will look so much like this. This will be your entry point. Your take profit will be here. In case I did not define take profit yesterday, take profit is a point whereby the market reaches and the market will close in profit in your own favor. Take profit is a point whereby the market reaches and the market closes in profit. They also call it target profit. Stop loss is a point whereby the market reaches and the market closes in loss. Let me repeat myself again. Stop loss is a point whereby the market reaches and the market closes in loss. Go and take note. Take profits and stop loss are very essential in the forex market. Are you with me? So let me proceed. Let's say you're in a chart. The market was swinging, but you are feeling bad that this thing is spending so much time consolidating. When the market is consolidating, you'll be seeing a zigzag sign in your charts in the forex market. Let's say at this point of consolidation, this market was actually at $40. So let's say the value for this entry point was 1.22. The value of that entry point was 1.22181. Let's say from here to the take profit, I just added only 20 pips. And of course, if I had 20 pips, that would be what? 1.22381. And of course, my stop loss is going to be what? 1.21300. I'm assuming that's stop loss. I didn't really give it a recalculation because I just want to explain something about the chart. Now, see where people usually miss it in the forex market. People feel that when forex market is in profit, when the market is in profit, they can leave the trade and the trade will be running for years and it will be going. You make a big mistake. When you have a trade in profit, let's say it has even gone beyond your expectation, the best thing you can do is to trade stop. Like I said, trade stopping is a way of locking your profits in the forex market. Trade stopping is a way of locking your profits in the forex market. So what you do now is, since I want to trade stop, do you know what you do? You go to that trade. Don't worry, in the advanced class, I will do a lot. In the advanced class is for practicals. No doubt about that. You know what you do? You now modify that trade. How will you modify that trade? If you click on modify, since you are now in profit, You now move your stop loss above your entry point. So now, you now give your stop loss a new value. Mathematicians in the house, you agree with me that this value will no longer be 1.2 and 300. The value will now lie between 1.2 to 181 and 1.2 to 381. Let's say probably this value of my new stop loss is now 1.22. Please, network might misbehave. If it misbehaves, just calm down to connect back. It has been somehow tonight. Let's say this now the new stop loss I modified and gave it to. Now, do you know what this means? It means that this trade, even though it consolidates, even though it goes up, comes down to hit your stop loss, you should even be laughing. You know why? Because that trade struck your stop loss above your entry point. I repeat, that trade struck your stop loss above your entry. So at the end of the day, instead of this thing going down and hitting your stop loss at the bottom, you can even smile home with how much? Probably with $29. Are you saying this? Let me tell you, class, I will tell you one secret about me tonight. As somebody who has gained some experience in this market, I trade stop a lot. And let me tell you one secret that makes my account successful. I trade either one at a time or two at a time. I never load my account. Because if you load your account, what if a news comes into the market and everything reverses against you? You burn your account. I trade most times I trade one at a time. If I get the profit I want, I will trade stop. Once I lock my profit, if luckily for me, I can even still increase my take profit is still going up, I'll be pushing. Let me explain what I just said now. Let's say for instance, this take profit, I notice that this market is going up. I can still be moving my take profit up. While I'm moving my take profit up, I can also be moving my stop loss up. If I now move this stop loss up, I say it means that if eventually this thing now comes up again, it now starts consolidating, it can now even, since you have moved your stop loss above, it now eats your stop loss above your entry point. You can even make better dollars, probably like $56. Yeah. Are you saying it? So this is the secret of trade stopping. This is how wise traders, they make their money. I just want to use 3 minutes to ask questions. Is there any question? Is there any question before I continue the class? Is there any question before I continue the class? Okay, if you know you understand, type 5 in the chat box. I understand what God's power is doing. Type 5 in the chat box.
I have question.
Okay, sir. Please, can you be fast about it? The question section is just 3 minutes, please. Yeah.
But I have question in that partial distance.
Okay.
First one.
Don't worry. I've noted that. I'll talk about it. Pertaining what I have done, is there any question on what I've done, class? Mr. Peter, do you have any question? Mr. Shino.
I understand what you are saying. All this, I'm aware of it. I'm just following up for more enlightenment. So what we're saying is in order, is correct.
Okay.
Because as the market is going your direction, what you do is that where you put your take profit, you modify it by shifting it downwards. Then in order to save the one that I've already made, you now go to your stop loss and shift it downwards in case if let's say assuming that your phone now went off,
okay,
and you are not in market, what that stop loss will do, that if the market is reversing now, it will just hit your stop loss and then make some profit for you instead of wiping up the whole profit that I've made for the day.
Oh, that's
so I'm with you. I'm following you. Yeah.
That's perfect. That's perfect. All right. Thank you so much. Let me proceed, please. The next one I like to talk about here is swing trading. The next one I like to talk about is swing trading. People call it swing trading. Some people also see it as triple trading. What is swing trading all about? Let's say you have a signal given to you, and the signal is GBP AUD. And let's say your entry point is, let's say your entry point is 1.22 030. Let's say your take profit one is 1.22. Let's say you're adding 30 pips, 330. Let's say you add down that 30 pips again, take profit 2. 1.22 630. Then let's say your stop loss is 1.21 300. This was a signal you created from your chart. Now, you agree with me that in the Forex chart, it will look so much like this. This is your entry point. Then your entry point has a value. Let's say it has, then this is your TP1. This is your TP2. Let's say this is your stop loss. Now, let's say because it is 30 pips, let's say it is $30 you have to make from year to year. I twin trade a lot. I do it very well. Now, let's say because it is from the entry point to this TP2, it is $60 you're making. Like I told you yesterday, today and tomorrow will be about trade management. Now, if you have a trade, once let's say you have this trade, it goes up. This was a pending order. Are you with me? I will explain these things further in the advanced class. I need to explain some deeper things there. This was a pending order. Now, if this trade goes up and strikes your entry point, immediately strikes your entry point, you are already in the market. So if you're in the market, both trades are running. So both trades will be going on, GBP AUD, GBP AUD. Now, if this trade now goes up and hits TP1, guess what? Immediately it hits TP1, you have $30 registered in your profit margin. Are you there? Immediately it hits TP1, you have $30 registered in your profit margin. Once $30 is registered, let me use one stone to kill two birds. Once $30 is registered, you can now move this your stop loss. You can now move this your stop loss and change the value of your stop loss at your entry point. So it means that this is your stop. Let me use a red marker for that, please. Once you now move this, it means your stop loss, you change the stop loss value to your entry point value. What am I trying to say? This your stop loss, you now have the entry point value, which is also 1.22030. So do you know what this means? It means that you have broken even. There's something in forex market, they call it break even. Break even is when you change the value of your stop loss and place at your entry point. Are you saying it? So once you put this here, what this means is once you hit that TP1, remember you have $30 in your account. If God forbid, this market now misbehaves and begins to swing down, going down, going down, going down. It comes and hits your stop loss, you don't have to cry because it's only stop your stop loss, which is already at the entry point level. So right here, at the end of the day, you have to end that trade with $0. I say it. So $30 plus $0 will give you what? That will give you $30. But if God forbid, or sorry, if it's in your favor, this trade goes further and hits TP2, you have double cash for you, meaning that you have the first $30 and you have what? And you have the next one be what? Next one be what? $60. So 30 plus 60 will eventually give you what? $90. Can you see? So I also brainstormed on something. Do you know that while this trade is about approaching TP2, while this trade is about approaching TP2, do you know that you can also trade stop? As it's still going up, like we said previously, you can trade stop. How? You can also be pushing this your stop loss ahead. So if eventually this trade now misbehaves, remember you have $30 already, it misbehaves, and it comes here to hit this your new stop loss. You have not lost anything at all because you still have the same $30 and you have probably additional $12 added. So at the end of the day, you have $42. If you look at my 3 outcomes, you will see that there is no how you twin trade that you can ever be in loss. I repeat, there is no how you twin trade that you can ever be in loss. I hope that's clear to everybody. I hope that's clear to everybody. Let me talk about the last one. I think I have one more to go. The last one is edging. The last one is edging. You see, edging, let me explain something quickly. What edging does is, let me clear my screen. Edging is, for instance, you have a trade and that trade is at a loss. Let's say you're actually at a trade and you're at a loss, which is GPP AUD. So since GPP AUD is at a loss, then you are feeling worried. Probably you're already having minus $100. What edging does is, since you went for a buy in this condition, you will now enter that same trade. If you enter that same trade, GPP US AUD, you can enter this market as a sell. So what this thing means is, if this one is going up, this one will be going down. Meaning, let's say this one is now 100, this will start from profit of 0. I see it. So if this one is now going up as 110, this one would have had a profit of 10. If this one is now going on 130, This one have had a profit of 30. But what hedging does is, hedging stops you from acquiring further loss. Are you with me? Hedging prevents you from what? Acquiring further loss. So that's that. Before I tell you to ask your questions, like I said, the advanced class is fast approaching. Today is already Wednesday. The advanced class will take place on Monday. And I said that date is exactly 8th of August to what? 22nd of August. Please try to subscribe to the advanced class. If you start making payment for that advanced class, I can assure you that I will put you automatically in the advanced class platform. We are going to be using Telegram on that platform. We are going to be using what? Telegram for that platform. And I'll also be dropping all these recorded videos with, of course, PDFs given to you. So is there any question? Okay, this man said partial closing. Let me explain that in minutes. For partial closing, I said it when you have something like this. Let's say you have 0.05. I need to be fast here. And I said, let's say you have a trade, GBP USD. I said rather that if you have $20 running, let's say you want to book part of this profit, you can reduce your lot size by clicking on modify. So if you reduce your lot size, that will be 0.04. So once you type 0.04, at the bottom, you will see close with $16. Once you close with $16, you have $16 your profit margin. And because you have $16 your profit margin, you are still entitled to the remaining balance, 0.01. So you leave that running. Is either you claim that in profit or you claim that in loss. Thank you. Is there any other question again, please? Is there any other question again? Is there any other question again? Okay, if there's no other question, Mr. Ofoma, is it clear to you what I did? Mr. Ofoma, is it clear to you what I did? Okay, if there's no other question, thank you very much, class. I'll see you tomorrow. Tomorrow will probably be the last day. Thank you all. God bless you and see you tomorrow. Bye for now.